The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this May the 8th session. We've got less than an hour, 2 hours to go. And then we hear news about the Iran statement. It's a little weird. It kind of feels, I remember this when I was an athlete waiting for the sprint. That 30 minutes or so before, you just kind of bide your time, or when as a professional musician, that period just before the concert where you're warming up, you've kind of warmed up, you're just hanging around waiting. Your mind is kind of, it's all over the show. It's on that difficult passage that you hope to get right. It's just the interpretation. It's the what's going to happen when you're actually on stage or at the starting block. And here we are. We've got 2 hours to go. One of the reasons why this is a fairly important moment, time-wise and price-wise, here we are. Look, the E-mini is down 6 at 26.63. We're in the middle of a trading range from the high that was made about the 22nd of April at 27.18 down to the low that was made 4 days ago at 25.91. And here we are, 26.64. The MACD is improved. It is now slightly positive. Stochastic is rallying. It's not great, but it's rallying. The price is holding nicely above the 9-period exponential moving average in the daily chart. The reason why I say this is important is because, look, the weekly chart is on the cusp of either pushing above the 9-period moving average. Would be really nice if all the rest of the week it was trading above, let's just say 26.60, let's call it 26.67, so about 2 points from where we are right now. And if it closes about 2 points lower, 26.62s, that's suggesting that yet again, that 9-period moving average is going to be tremendous resistance to overcome. The lower we go. In the 120-minute chart, we made a peak F at 2681.50. The MACD's turned down. Stochastic's way down 19%, was lower than that just a little while ago. So it had one pop-up. It's holding quite nicely. What should normally happen, this is the same thing as when the Fed makes its announcement. Very often the market is either down or up, but by the time you get into that 2 o'clock announcement, it just comes right back to unchanged, as if to say, I don't know if I'm going to break up, I don't know if I'm going to break down, but I'm just holding steady right here. We've got something that it was like that a little earlier, and now you've got some weakness. Now, here's the reason why the result, I don't care what is stated, it is what the market responds to. And let me go through this. Now we can go through it one at a time. Let's get out of the E-mini. It's the start off, and we'll run the numbers in the Dow. The Dow right now is down about 44 points. I had a really nice comeback from the 23,531 low that was made 4 or 5 days ago. Let me type that in, 23,531, I believe it was. And that was in trough A, trough B. Call it gray trough B. We've made another gray A, and unless we today or tomorrow break, you don't have to close it, you need to break above 24,480 to really start pushing this leg A higher or start a brand new leg B tomorrow. One of the reasons why this is important is because the strength that we saw, especially my Dow Quartet, GE, IBM, MMM, and UTX, off the low of Thursday and then Friday, followed through with yesterday, is saying there's just enough there are enough signs of strength, together with the lower VIX index, although it's up 31 cents right now, it's still in the 15 area, And that's for recent times, that's low. It's not low at all if you think that it was back in the 9s and the 8s just 4 or 5 months ago, 6 months ago. So what we're looking at is within the context of the Dow holding above the 2422 level for 24,222 for 24,222 support of the 9-period exponential moving average will be very important right here. Why? Because it will allow this rally that started in the stochastic and the MACD 2 days ago to continue pushing higher, and then you can start to see a test of the 25,600s, maybe even a test of the 24,700s. I don't know yet. We are long. We've tightened up our stops, very reasonable stops, and either 1% or much less than 1% in some cases. But what's really important about this is that the weekly chart is going to improve a lot if it can even get into the 24,500s. That's 200 points from here. And it needs to do that by Friday. A breakdown to under 24,200, certainly under 24,100, is a warning to say, hey, this strength is waning. Monthly chart, nothing to talk about there. It's still holding pretty darn well. So let's just go to the S&P. So those are the parameters. Key support, shorter term, 24,200. A close below that says, hey, just be a little careful. A close below 24,000 says, uh-oh, that's a problem. All right, meantime, our bias right now is to be slanting towards the long side. We have only longs at this particular point. Let's go on. S&P, SPX. So next, the S&P right now is down 5.5 at 25.67. 26.58, is that? A little difficult to see. Yes, 26.58 is the key support in the S&P cash. A push above 26.84 would be very positive. Keep that in mind. Let's go to the QQQ. Why? Because the QQQs have already gone to a leg D. Chapman wave is where we start to, if the yellow light at a D, it doesn't mean to say that you're going to do anything but a little slowdown, but it's where you could have a sharp reversal. We're watching it at 165.69 down 55 cents. It needs the 167.50s to really say, hey, I want to keep moving up. If it goes under 164.30, close below that, it says, uh-oh, little problem there. Weekly chart is still okay within the context of both the Dow, the S&P, and the QQQs, the index 100 power shares. Daily and weekly charts are still in sell modes at this particular point. IWM at this stage is up 0.04%, up 0.05 at 157.10. It needs to get to a leg D, and that would occur above that peak C of the 18th of April at 158.38. Holding quite nicely, still holding as one of the best looking charts. Still hasn't broken out, but it's still looking good. Aha. Now we get to gold. Gold is coming back a little bit. It's down 3 off the lows of the day at 13.11. How does it respond? Here we go. Now I can start talking about how do things respond at 2 o'clock when the news comes out. We'll have rumors about this and we'll have rumors about that. It's the facts that we want to deal with. Facts come out later on. Basil Chapman, Tiger Technicians Hour. Dow's down 40, S&P's down 5. I'll be right back. Continue our analysis and the what to look for at 4 o'clock today as markets close. Up right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, so let's get to the nitty-gritties. Gold is down 2.6. It is right at the 200-period moving average support. It's tested that a couple of times. And weekly, that is under the 200-period exponential moving average, the orange line, and the 9-period exponential moving average is just about to cross negative. This is exactly where you could get a little bit of a bounce based on these two moving averages and then come back down for a retest. So here's what's really important. If at the end of the day, there are two scenarios, obviously. One is a bullish one, and one is a bearish one. Is the bearish one bearish, or is it just intraday going into tomorrow bearish? Then the market says, ho-hum, just another little hiccup, and let's get back to our business of trying to rally, or does it get back to the business of fading? Here we are. If the Dow is, this is what I said to my subscribers to my opening call, because we have quite a few long positions. We have a couple of under-the-radar stocks and a couple of focal stocks. Within that context, if gold suddenly reverses and is up about 9 and closes at the high of the day and tomorrow continues running another $3 to $5, that says gold has made at least a short-term low and should continue to rally. One of the reasons being the 200-period moving average in the weekly chart traditionally should be some kind of a bounce-off level once it's tested successfully. It's tested unsuccessfully if gold closes today or tomorrow, actually trades, doesn't even have to close, just has to go underneath 1305, let's call it 1303. Any movement under 1303 says no, gold is not ready, it's going to continue pulling back. Here we go. I'm just adding silver now just because I want to look at silver. Silver at 16.44, silver at 16.78 or higher into tomorrow. Very nice action. Silver towards 16.20 or lower, not good action. It's a 16.46 right now. Now here comes the big kicker. The dollar. The dollar made a new recovery high today. It's trading up 37 cents at 93.13. It's had a fantastic, it's had two red candles since this little doji candle low on the 15th, 14th, what was that, April? On the 17th of April, The low is 89.45. We've been long since the 6th of April at 90.02 for my subscribers to my opening call. And look what's happening. You've rallied straight up past the 200-period moving average, past that horizontal resistance line at 92.55. You're now, for 3 days, no, for 5 days, I've been saying, yeah, you can expect some kind of a consolidation, just a minor consolidation. We haven't even had that consolidation yet in the dollar. So the dollar index, if it's trading under 92.50 at the close today or early tomorrow morning, can I change that? I'm going to say under 92.30. 92.30 is the 9-period exponential moving. Now I'm going to give it the whole of tomorrow. All of today into tomorrow. That's a short-term change of direction, consolidation. Gold should rally. Dollar's going to pull back. The Euro, EUR, USD trading at a new low at 1.18 instead of being at under 1.18. It actually bounces to 1.20, 1.206, somewhere around there. That's saying it's trying to make it turn, trying to make an upside turn. The weekly chart says it's not really ready for it, even if it has a bit of a bounce. But that's what I'd be looking at. And the USD JPY, which was hinting yesterday when it wasn't following the dollar, and again today, that in fact, it's stuck under the 109.54 200-period moving average. It's right on the 109.10 9-period exponential moving average, and under the SMA, the smooth moving average of 110.21 is trading at 109.10 right now. It is saying it's in a bit of a consolidation. It's been this way for 4 days, hinting that the dollar might take a little bit of a pullback here. So that's what I'm watching. No. We need to go straight to the crude oil. That's going to be absolutely imperative to watch. It's down to $1.67 after making a leg D yesterday. A peak D if today doesn't touch 70.85. 70.84 was the high yesterday. Here we are. Crude oil looks like it wants to pull back. Crude oil on the daily basis had a lower MACD with a peak D that went higher, right into the Chapman wave inside track resistance area. The stochastic's at 82%. It's good, not great. Should be much higher, but it's at 82%. On balance volume just turned down. At the end of the day, going into tomorrow at 10:35 tomorrow morning, Wednesday, 10:35 Eastern Time. That's probably past any report that comes out. If the dollar is trading above 71.40, that dollar is going to go, if the crude oil is trading above 71.25, let's make it, trading above 71.25, that says crude oil is still going higher. It's got the Chapman wave stalk leg formation. It made the peak D, it made the neck, it made the beak. The beak went into the body. If crude oil in the next 3 days, I'm giving it 3 days, doesn't have to close. If it breaks under 66.85, the low of the 1st of May, that is in the Chapman wave parlance of the stalk leg formation, where the beak breaks under the body of the oval after a peak D top, and that suggests that crude oil should go lower, and there's tremendous resistance now at the 9-period moving average. That'll be about 68.80. I'm just being very specific here. These are things that you can look for. These are things that, in a sense, give you the signs that I personally am going to be looking for if we want to continue holding our longs. Now, we do have longs that are all over the show. One is a Dow stock. We've got the dollar. We've got a, how do I put this? Medical marijuana stock. We've got the semiconductors that we are now long again. Just as a trade. This is just treated as a trade. That's all. It's up very nicely from our entry point. But hey, the day is young. So those are, I'm going to include, the SMHs. Why? Because they led the market up. They led the market down. They're very important right here. They're up 32 cents at the SMH at 101.66. By the end of the day, if the semiconductor is under 100.30, no, if it's under 100, that's really not very good action at all. If for I don't care what the reason is, if it's suddenly trading at 102.40, up 80 cents from here, that's really nice action, and then we should rally further this week. Those are the parameters. I'm setting them. I'm making them tight. Why? Because this is the potential for inflection point failure. The inflection point should have been the other day where we turned around. We should be continuing from Thursday's low into higher recovery highs. If we fail right here, that's a failure pattern. You're right.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yes, I got a lot of questions coming in. Okay, so let me do this. I haven't finished the TLT. See the way the arch formation in the weekly chart and the monthly chart is forming? There is strong evidence to say that the action of bonds, bond yields and bonds, obviously, over the coming, I'd like to say month of May, but I don't think it's that. I think it's really the next week, week and a half. Let's say tomorrow week. Let me just also remind you, tomorrow week we've got Dave White's options discussion, a webinar for subscribers to his newsletters. Should be a wonderful opportunity to study. I mean, he's just been a whiz at trading the options. Really understands how to time the entries for very low price risk. So what we're looking at is a week from tomorrow, the TLT, trading at 118.47, is in the lower range of this arch formation. But you see, my biggest concern here is that so far, instead of, usually when I get a peak C1, C2, like I do in the weekly chart of the 30-year T-bond yield, the white one, TYX, there's usually a pullback that says, if there is a pullback in this cup formation, 1/3 to halfway down, then there's a really good chance that you're going to go to the low of the cup. Instead of just a cup and handle, it just makes a kind of like a double U formation. In other words, there's the same pace. The U makes a second U, cup makes a second cup. In this case, the handle makes a second handle. But there is a breakout in the 10-year TNX that is holding really well, and the FVX is holding even better. And it seems to me that the peak C1, C2 at 32.21 and 32.19, 3.219% in the 30-year is hinting that it should go to a D. So this makes it really important. And my suspicion is that even though I am anticipating a rally that lasts just a little while longer in May, and then we get a big test of strength and weakness, it'll be yields eventually that turns around and says, you know what, these yields are giving competition to stocks. You go to a certain percentage in yields, a lot of people are going to say, you know, I don't need the risk. I mean, sideways since January, February, March in most of the indices. Do I need that? So this is something to keep in mind together with crude oil. Crude oil breaks into the 72 area. It's saying, oh, be careful. And that's a big breakout. And yet dollar and oil going together, this is really an important week. In fact, I'd say going into tomorrow and Friday, right into the end of the week is going to be very important for all the charts. Okay, now I'm done with all that. To make it real simple, if going back to the TLT, if the TLT, if the TLT closes by Friday above 120.10, I'm going to say, hey, yields are going to have a much deeper pullback. But I also watch the market, because when the equity sector becomes really choppy, money tends to flow into bonds, the so-called safety of bonds. So that's what I'm looking at. And if the TLT goes under 117, which means that the TBT has started new legs C to the upside above 39.29, it's at 38.16, it's a long way to go. And that will say the weekly chart is hinting that TBT, the inverse of the TLT, is saying yields are going much higher. Keep it as simple as you can. Here we go. Question, let's go backwards. NVDA, question by Paul says, is there a question or is that just an... can you please review NVIDIA in terms of on-balance volume, OBV much lower, however, price very close to highs? Thank you. Love the show and newsletter. Thank you, Paul. So, Paul, this is what I'm looking at here. In NVIDIA, I've got this as a potential peak B, a leg B, gray leg B, because it's under the previous major high. That was the high that was made back on the week of the 16th of March at 254.50. This is a fantastic rebound going from the 250 area down to the 210s. I would call that a huge correction. And now we're having a rebound, and this rebound will take NVDA trading at 249.04, up 32 cents, to leg D if it takes out 254.50. So now we are long the semis, and one of the reasons why I'm long is they're just enough semis, not all, but they're just enough that say to me, this is a rebound, as some of the stocks that were kind of beaten down, as others within the sector were much weaker. They just complete their moves to the upside, and then we've got to be careful. Look at Intel. Intel was a spectacular winner, had a rogue wave, 55.79 high about a week and a half ago on earnings news, closed way below that high, and now it's been struggling. Peak F, I've got it in the weekly chart. A new breakout says, I'm going to call that a C, going to a B, going to a new leg C. Monthly chart leg E, huge doji candle, long-legged doji candle. I'll talk about that tomorrow. I don't want to take time right now, other than to say there are just enough stocks in the SMHs to push a little higher. But at the same time, I'm calling it a rebound. I don't think it's going to last. And then I think we have to come back and do some testing of the 98 to 97 area. It's already had a 16% correction. So this is a bounce within that, maybe the halfway marker. I don't think so. It's 104s that I'm really looking at. And that's where maybe we'll have to change our mind. Okay, that's that. So NVIDIA. So on balance volume. Not technical Friday, but I want to do it. See what happened is that the low that was made in NVIDIA, and I looked at this about a week ago, and I said, you know what? NVIDIA has had a very sharp move to the downside, one of its biggest percentage moves in a while. It's done that before. This is one of the big ones. And it's gone down to 220.50, 210.30, and the on-balance volume made a V-shaped recovery, went flat after that, but then broke to the upside. But the stochastic made its low around about the 9th, actually around about the April the 10th, the day, 3 days after its low, and has been making higher lows, as well as the MACD higher lows. This is still a strong stock. I think Dave White, I heard him talking about it, I think it was yesterday, maybe the day before. It must have been yesterday, about his about NVIDIA. I think there was mentioned about the options. Maybe it was with Tom. I'm not sure. But what a fantastic play! But it's still gone higher, and I'm liking this. And I'm thinking that NVIDIA is telling me that it's helping the QQQs, and it's of course helping the SMHs. So I like it. The unbalanced volume made that V-shaped recovery, made the V-shaped low. What did I say the date was? On the 25th. And the price did make a low in conjunction, and then it made, and now it's rallying with the price. So the unbalanced volume is working beautifully right here. Now, this is the reason, another reason why over the weekend I was looking at this and saying, Monday I have to be buying the semis. We actually missed the trade. We've got the trade today. Maybe that was a mistake, but I don't know. So far it's acting well. We'll see. But what's really important about this is that there was a V-shaped recovery in the unbalanced volume weekly. And if you look at it from last week, you see that V-shaped turnaround. I like that. I needed to see the stochastic and MACD turn up, and so far they are turning up. Nice action in NVIDIA. NVIDIA is acting very well, and it's actually a leader for this particular market. So, Tim, I hope that helps you. Is that Paul?
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, I can't believe it. For about a week now, I've been meaning to mention VRX. You know, we had George from New York, wonderful analyst. This is not what he does. This is a full-time job. He has something else. But at the same time, he is really involved in the stocks that he picks. He does a whole beautiful analysis of them, both PEs, expected, the expected earnings, the current valuations, etc. Valiant Pharmaceutical, he was talking to us for ages about, and it just spiked up today, 12%, up 2.26 to 20.42. Now, I can't believe it made a peak F. I did the analysis. I kept talking about it for my subscribers. I kept needing to put it on as a buy. I just, you know, I had too many things to look at, and I just overlooked it. So it makes a peak F, and I'm expecting it to pull back a little bit more, and then pop today. I see we go buying the ticker when I was at the gym. I see VRX, and I say, oh my God, VRX. There's something about it. Change the name, takeover, I don't know what it is. But anyway, it's up beautifully. Congratulations, George. Beautiful analysis. Next thing I'm looking at, MWA. I get a subscriber question about it. MWA, where was it? Right here. Tim says, yeah, where is that? Whoops. How many mice do I have here? Okay, here we go. Tim. Basil, MWA took a jump today. I was wondering where you see a good entry price. Thanks, Tim. So, Tim, this is a tough one. Look, it was failing. It was making lower lows. I mean, it's been on my watch list for ages. This is Mueller. Oh, another Mueller, huh? Anyway, Mueller Water Products trading up 1 at 11.07, up 10%. Wow. You know what I'm going to say? I don't know what the story is. I don't know if it's earnings. I don't know what the story is. Remind me again in about 3 days' time. Why? Because if it doesn't take out today's low of 10.79, that's real tough. It means that you have to have 3 entries. You can, in 2 days' time, if it still hasn't taken out the low, you just have to buy it in the 11s, saying 1 entry at 11, 1 entry at 10.40, and another entry at 9.80. Just small entries. The whole thing will be great if you only get 2, and then it starts to rally very strongly. But I'm going to say, I'm going to wait. I don't know what the news is. I don't want to take time right now to find out. You hit the 200-period moving average exactly at 11.43. Now it's pulled back. It's 11.03. Remind me again in a couple of days. The only way I say to you, if it's a good earnings report, then I'm going to say, you know what? You can take a little position right now. It's a starter position. It's a feeler position. You really want to be buying it below that doji candle that was made on the 17th of 10.80. And I'd even say I would prefer that if it got to 10.80, just to wait for the 10.60, 10.40 area, take one position there. The real position starts there and maybe a little bit lower. But I'm just saying to you, I need to know what the story is. But yeah, it's on the list. Water is really important. It's had a huge pullback from the 14s to the 9s. I don't know what this is. Let's look at it again. If I'm looking out on a monthly basis, the monthly will now be improving. So that's why I'm saying if it's on your long-term list, you've missed by 1.5 points of a really good entry point. Now I'm saying to you, I need a compromise of that particular level. So I'm going to wait. It's on my list. I need to know why. If it's an earnings report, this is on my buy list, and I have to wait for a pullback. If it's just because of some news event, I'm just going to say, ho-hum, let's see how it holds if it comes back to 10.60, and then we'll reassess. So that's that. Next question was JEC. Was it Jacobs Engineering? I haven't looked at that for ages. Yep, Jacobs. Same thing. Pop, goes to the upside. This is, I think this must be earnings. A, B, C, just made DE, made an E. Trading at 61.14, up 4.43. Yeah, it looks to me, this one I do want to look at. Why? Because this is part of the infrastructure. So let me just see if there's a news thing that I can get. Sometimes this news thing it's really a lousy news outlet. Jacobs Engineering, earnings group, beats. Oh, it's a beat. Good. Now that's very different. That means that I need to take the time to see if it's MWA is the same sort of thing. Okay, MWA. I'm going to have a different analysis if that was a beat. What happened? I pressed the button. Don't see nothing. All right, let's do it again. Oops. Jacobs Engineering accommodated me. What happened to the news thing here? It was right there, and now it's disappeared. Oh, maybe there it is. How did that move? Never moved it before. Oh, it's a beat. Yes, MWA beats. 0.577. Pending. All right, so it's an earnings beat. Q2 EPS, 12-cent beat. Beats by zero. Beats zero. Okay, very good. So that's different. Okay, so now I can do the different thing. I'm going to say to you, because it's a beat, because the market is still really choppy, I need to have a pullback. So I'm saying now below 1080, between 1080 and 1060, over the next 2-3 days of MWA trading at 1102 Miller Water products, you could nibble on. You could just start a position. I need to give it a week before I know that I want to add to it. But it's just to start a position. Jacobs Engineering for Tim. Did you ask me a question? MWA. Yes, okay, so now it's at 61.13, Jacobs Engineering. I got it all mixed up. Tim is MWA. Who asked me about it? Oh, JEC was over there. GT asked me about it. Sorry. Whoa, what a day. GT, it's at 61.09. It's up 7.72%, up 4.38 at 61.09. Yes, this is a really good sign. The monthly chart says peak A, B, C. This should rally to a D. Is it going to start right now? I think this is a news event. So here's my thinking. I'm not going to pay 61.09 when just yesterday it was in the 57s, 56s. I am going to say to you, I would begin looking at it, and exactly like MW, I would start a small position. If it can, it doesn't have to close, but it needs to break under 59.79, the low of today, and it might take a couple of days to do that. If it doesn't do that for a week and it keeps going higher, we've missed a good entry point, but that's okay because that's tremendous strength, and that says the middle of the gap will then be a really good entry point. This way, it's a starter position. So I want to see something around about 59.40, 59.50. I would start a small position if that's what you're looking for. MWA, same thing. In Jacobs Engineering, JEC, trading at 61.11, a big gap up, 7.77%. I also need to have a pullback. It doesn't, if it's an intraday pullback and then closes back under today's low of 59.79, that's fabulous action. But I would like it closer. Remind me again when you see it, but if it gets close to 57.80, just remind me. I might say to you, you know what, it's acting really well. It's maybe been 3 days. It hasn't broken down. It's a good entry point. But that's the way I would look at it. I couldn't chase it right here. I need to have a bit of a pullback. Well, a lot of questions still coming in. I'll get to them. XOM, etc. Yes, Basil Chapman, Tiger Gears, Dow 64, 7.5. Right.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Ringo says, Basil, rumor has it Trump will put more restrictions. Put more restrictions on Iran. With that, I would think oil, Brent, could go up. Your thoughts? Yeah, I think there's a chance that at least there'll be a reflex action to say crude oil could go a little higher. I'm going to be watching that very, very closely. It's a good point. Next one is EADSY and Boeing. What's the fallout? EADSY. That is the, if I can type it in the right place, EADSY. 29.69, down a little bit, peak C. This is Airbus. It's holding quite well. Looks to me like it should still go to a D. And Boeing right now is down 3. Boeing's the one I think still has a problem. So maybe I'm wrong, but I think it's going to consolidate for a while longer. Okay. Let's see, XOM. Well, let's see what the oils do. You know what? In 2 hours' time, I can tell you, but I can't tell you right now. XOM still stuck in a range. Make it simple. If XOM at 77 goes to 82 within a week and a half, that's absolutely fabulous action. If it pulls back and goes under 74 to 72 cushion, that's just breaking key support. Watch that closely. This is a Citibank. Trading up a little bit here. Oh, up a lot. Up 2.13 at 17.62. Must be some news. Yeah, the weekly and monthlies are not very good, but they're holding okay. I'm watching this. I think by Thursday I'll be looking for my subscribers, looking much closer at the XLF and seeing what's going on. I'm not doing anything just yet. I think the financials are going to be also part of the whole thing, the key to what happens. ODFL. Old Dominion Freight Line Rails holding really well. Nice move in the upper level of the consolidation. All I can say is that at 142.84, a pump into the 147s is good. Okay, just before at 2:30 this afternoon, if the Dow is down more than 120, going into 3 o'clock, instead of being down just minus 30 or trying to come back to a plus 30, that says, hey, watch out. We've got more choppiness ahead. Watch crude oil, watch rate, watch everything. I'll be back tomorrow. Have a great day. And stay tuned for Steve Rhodes. Great show.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.